Hey, if you have zero credit, but you know you're trying to get yourself a house, stick around because this video is for you. Hey, if you missed my live credit score boost training, don't worry, I got you. If you click the boost training link below, you'll be able to take part in that live training. Now, this training is for those of you that work long, hard days, and then you come home and you struggle trying to figure out what you're supposed to be doing to fix your credit. You don't know what to pay off and what not to pay off, what to dispute and what not to dispute, and you definitely don't know what you did wrong to make your score drop instead of increase. Now, what you'll learn by taking part in the training is my account identification process, which has saved my customers on average about $5,000 by not paying off accounts that would actually drop your credit score. I'm also going to share with you some accounts that have guaranteed approval, so you don't have to worry about if you'll get approved or denied, and these same accounts have helped my clients on average gain about 30 to 80 points. I'm also going to share with you my dispute process that I use that has given me an average account removal rate of about 13 accounts over a 90-day period. And not to mention, those of you that stay all the way to the end of the training, you're going to get a free gift which will help you with your credit disputing process. So if you're tired of going around in circles with your credit trying to figure out what to do, go ahead and click the link below for the boost training. I'll see you there. Hey everybody, Will Frazier here, your credit expert, bringing you the tips you need to get your credit back on track, because what goes down must come up. And if you don't want your credit score to drop 300 points, make sure you like this video, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I drop just like this. So as I mentioned, this video is for those of you who are trying to get a house, but you know you have absolutely no credit and you have no idea how you're going to be able to get a house, of course, with a zero credit score. First off, just know that credit scores don't start at 0. They start at 300 on the base FICO model at least. So if you already like this video, you won't be at a 0 because you didn't lose those 300 points I mentioned. But seriously, I know it's time for you to go ahead and get yourself a house, so you need some practical steps on what to do and what that looks like as far as getting a credit score when you don't have any, because there is a certain ground level that you have to reach in order to be able to get a house based on the current scoring requirements. So in order to get a house in this time and day and age, because of COVID, things had increased as far as the credit score requirements, or at least the floor that you had to get to in order to get there, where you can actually get approved for a mortgage. It used to be about a 620, but now it is a 660 middle score on average, which you have to have depending on what lender you go to. So with that being said, in order to get to a 660 middle score, you definitely have to have at least 2 of your credit scores at 660 or above. When you go to the mortgage lender, they're going to pull all 3 of your FICO scores, so you need to make sure at least 2 of them are up to 660 or better. Now, if you're checking your credit yourself to try to see where you are, just know that you need to make sure you're seeing a FICO score, because everywhere you pull your credit score isn't going to give you a FICO score, especially not if you're using Credit Karma. So getting a FICO score is going to be the best thing that you can do for yourself to make sure you don't walk into the lender's office thinking you're way up here but you're really down here, because Vantage scores, which is what you will see on Credit Karma and on a lot of other credit monitoring sites, they will actually be a lot higher than where you are on a regular basis. It can be anywhere from 20 to 120 points higher than your regular score. But just know that having your credit score up to a high level, even if it's beyond 660, that won't guarantee an approval for you. I know this for sure because I did a consultation with someone a few days ago, and they actually had a 700 something credit score, and they had recently applied for a mortgage, but they got denied. So you may be wondering, how can a person at a 700 something score and they're about 715 to 720, how could a person like that get denied for a mortgage? Well, one of the main reasons, and actually the main reason they did not get approved, was because they did not have a strong enough credit history. Or you may have heard this referred to as a thin credit file or a young credit file. So even though they were able to generate a score in FICO of 700 or better, they still couldn't get approved for a mortgage because they didn't have a strong enough credit history built up. Now, most of you guys are always sticking to what you see as the score and thinking that that's the only thing you need to worry about, but this is a true reason that you guys need to also be making sure that you're looking at the items on your credit report, because they definitely determine if you can get approved for something or not. And if you just think about it, you know, just using your own common sense, if somebody came to you asking you for about $150,000, $300,000, but you see that they've only managed one little credit card or something like that, would you want to give them all of that money and feel confident in giving them that money that they're probably going to pay you back, just knowing that they only have used one account and generated only a little bit of history, maybe less than a year? No, of course not. You're going to want to see that this person has had multiple accounts, and preferably at high dollar amounts, so that you can know that this person is capable of paying back money. They've done it on multiple occasions over multiple years and done it for large amounts as well. So that was the problem that that person saw themselves facing. But really the key to getting past that or not having a credit score at all is building credit, and that's what I'm going to show you how to do. So the very first thing you need to know is, of course, check your credit report. Find it somewhere, make sure that you're getting all 3 reports, and make sure you're looking at FICO scores. That's the best way to see where you are now, or to see if you don't have any score at all. If you're looking at a Vantage score, then and you also have no credit built up, then you might actually see a score and it may be a low score. But if you are looking at a FICO score and you have no credit built up, then you will not see any type of credit score at all. Or you may see some weird number or error or something like that on the report where it would have your score. Now, once you know where you are, you can know what to do next. And the very next thing that you need to know is, should you be using a loan or a credit card to try to build up this credit that you need to get? And I can tell you that getting a credit card usually will help a person's credit score faster and more significantly than getting a loan. However, if a person has never had a loan on their credit report or don't have any active loans on their credit report, then having a loan on your credit report to build credit will actually help you as well. And these items would help you, of course, in the payment history area of your credit report, in your debt owed, in your credit utilization area, and also it can help you in your mix of credit by having different types of credit accounts. So again, getting a loan and a credit card can be advisable to somebody who has never built credit yet, that has a 0 credit score, or that has a thin credit file. And it's also recommendable, based on my recommendation, to have at least 3 credit cards reporting on your credit report at all times. Now, since you know which type of account that you need and you actually are about to go and apply for those types of accounts, you need to know that if you don't have any credit built up, there may be some places that may deny you for a credit card because you don't have a credit card, which doesn't make any sense. But of course, that's just how it works. You have to have some type of credit to show them that you're capable of paying back credit before they'll give you some additional credit in the form of a credit card. Some places aren't like that. Even with a secured credit card, it's possible for you to be denied for that. I know you may think that you shouldn't be able to be denied for something that you're putting up your own money, but trust me, I worked at Wells Fargo and I used to see people get denied for secured credit cards all the time. So when it comes down to it, whether you're getting a loan or a credit card, what you want to look for ideally is somebody with no credit check, or somebody that would approve somebody with a lower credit score, because I try to tell people to try to get unsecured credit before you do secured credit, just so that you don't have to put up a deposit up front and you can just go ahead and start building credit immediately. That goes for secured loans and secured credit cards. Another thing that you want to look for when you're picking this account that you're going to get is you probably want something that's going to report to at least 2 credit bureaus, because I told you at least 2 of your credit scores need to be at 660 or better in order to get approved for a mortgage. And by making sure that you have actually gotten an account that's going to report to at least 2, ideally 3, then you're going to make sure that you have increased your chances of getting whatever credit score higher. You're going to make sure that you put yourself in the best place to try to get approved for this mortgage. Now, before I tell you guys what accounts are some good accounts to go and apply for, let me also let you know that when you start building up credit, or if you haven't used credit at all, then that's going to mean that it's going to take at least about 7 months before you actually generate a credit score for yourself. Now, that's because the way that FICO calculates your score, it needs at least 6 months of payment history to generate a score for you. But because accounts may be reported a month behind, you may want to wait 7 months to make sure that you see a score, and then at that point you should definitely see some type of credit score. So now, with that being said, if this information has been good so far, if you've learned something that you didn't know before, make sure that you do comment below any information that I'm sharing that's new to you, that is very helpful to you at this moment in time while you're trying to build credit. So now, you guys are probably wondering, okay, what accounts can I go to that can have easy approval for me, or no credit check, or that's going to report to at least 2 or 3 of the credit bureaus that I can use today to start building up credit? So I'm going to give you guys a revolving option, because as I mentioned to you, this would be the best thing for you, because like I mentioned, credit cards are going to be the best thing to get you the most points and to get it to you the quickest based on how it's reported on your credit report. And I'm going to recommend to you that you try Kickoff. Now, when it comes to Kickoff, one of the most major benefits to going with them is that they don't do any credit pulls and that they approve about 98% of the people that apply. Usually the biggest issue that you'll probably run into would probably be something like a bankruptcy. Now, they report a $500 revolving line of credit on your credit report, which is really good because the higher the better. A lot of times when you get secured credit cards, you're probably going to have a credit limit of about $200 to $300. Even on some of those unsecured credit cards that will approve you with a low credit score, you're usually going to get about $300. And another good thing about this account, which some of you guys may be a little bit unsure about, because usually when you're trying to build credit, you want an account that you can spend anywhere. No, you can't spend this account or this revolving line of credit anywhere, but that's actually a good thing because it will keep you from overspending on things that you want because you have this money available to you, which is usually where we get into trouble because we're trying to build up credit, but then we end up shooting ourselves in the foot because if you increase the utilization to too high of a percentage, it will actually drop your score, and then you would have messed up everything that you were trying to work towards in order to get this house. Because no, it's not just about the payment history, it's also by keeping a low utilization on credit cards and things like that. Another good part to the fact that you can't use this anywhere is what they do actually allow you to use this line of credit for. And that is, you can use this line of credit to make purchases in a library that they have of financial education books. So not only will you be building up your credit, but you will also have access to ebooks that you can use and that can help further your financial IQ and help continue to get you into a better position financially even after you've built credit and gotten your house. So again, go ahead and check out Kickoff. There's going to be a link to them down in the description, and that should help kick you off into a better financial future. Yeah, that was a little corny, but just work with me. Now, with all that being said, basically you need to go ahead and secure some type of account that you can actually use to build up credit, and you can use either revolving line of credits, credit cards, or loans for that. You need to make sure that whatever accounts you go with, that they report to at least 2 or 3 of the major credit bureaus so that you can make sure that you are getting at least 2 of your scores to 660 or higher. You want to make sure that you are actually using those accounts for at least 7 months before you go to try to apply for anything, just to make sure that you have generated a score for yourself. You want to make sure that you actually have some type of credit monitoring from all 3 bureaus with 3 FICO scores so that you can make sure that you're in the best place before you go to apply at whatever mortgage lender you go to. And once all of those things have been knocked out on your end, then you're ready to go ahead and go and get your house. At that point, you'll get your approval letter, and you're just going to be working with some type of realtor so you can try to find the home of your dreams. And then the next thing you got to do is move, which is probably the hardest part out of everything that I mentioned to you. I know I hate moving. I don't know about you guys.